Here are the crypto top headlines covered in this video. Bitcoin halving could be a sell the news event, at least for a few months. Next, elections may swing Senate Banking Committee toward crypto, Senator Lummis says. Also, Ether ETFs will probably be rejected in May, says VanEck CEO. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons, as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Bitcoin halving could be a sell the news event, at least for a few months. Analysts say Bitcoin's halving could be a sell the news event as short-term speculators and BTC ETF purchasers book profits. Many crypto traders expect the Bitcoin halving event to be a pivotal moment in 2024, significantly impacting the crypto market. However, analysts at Steno Research anticipate that it will be a buy the rumor, sell the news event. There have been 3 halving events in Bitcoin's history, reducing miner rewards from 50 BTC to 25 BTC in 2012, 12.5 BTC in 2016, and 6.25 BTC at the last halving on May 11, 2020. Steno Research says that BTC is likely to repeat the 2016 halving with selling pressure sustained for up to 4 months after. We foresee the next Bitcoin halving as a short-term buy the rumor, sell the news event, echoing the 2016 halvings pattern, this time around even with heightened anticipation from Bitcoin ETF holders, the research firm stated. Steno Research expects a surge in BTC's value leading up to the halving event. However, it says the value could dip below its price at the time of the halving within the first 90 days following the halving. Steno Research analysts identified parallels between BTC price performance before and after the 2016 halving, indicating that similar outcomes can be expected from the upcoming event. The report noted that Bitcoin's price remained below its pre-halving level for the entire 90 days following the halving. Specifically, on the 90th day post-halving, Bitcoin was priced 8.4% lower than before the halving, Steno analyst Mads Eberhard wrote. According to data from CryptoQuant, Bitcoin daily mining rewards are at their highest ever as the price trades close to its all-time high. This implies that even though the number of BTC issued will be the smallest yet, after the halving, the value of this issuance will be high when measured in dollars. The report explained that with the current price at approximately $71,563, this reduction now translates to $224,512 worth of Bitcoin compared to the $55,000 the miners received after the last halving. Bitcoin miners have never earned as much as they have in recent months. As such, miners are likely to sell all their Bitcoin over time to cover the costs associated with their mining operations, the report noted. This then contributes to the sell-side pressure that causes the BTC price to correct after months after the halving. Further, the report explained that the halving is a bullish catalyst for Bitcoin's price once selling pressure from miners reduces. Eberhard said, "We believe the real bullish momentum of the halving will become apparent once the initial market adjustments have settled, and the weak hands, those investors who bought in anticipating quick gains, including some ETF investors, have exited." Another analyst, Alex Weiss, said the Bitcoin halving is going to cause a repricing that is expected to send the price ballistic, arguing that even though people know about it, it is never fully priced in. Not enough leverage longs can match the tsunami of FOMO buyers if this fully sends. BitGet Wallet Chief Operating Officer Alvin Can expects some short-term volatility post-halving, but that the bullishness arising from the event could lead to strong levels of interest and growth in the wider Web3 ecosystem. At the time of publication, Bitcoin was trading at $71,563, up 3.8% over the last 24 hours. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline: Elections may swing Senate Banking Committee toward crypto, Senator Lummis says. The committee is an obstacle, the pro-crypto senator said, but that could change soon. Cryptocurrency is increasingly becoming a political issue, and upcoming elections will be decisive in the future of crypto in the United States, Senator Cynthia Lummis told the audience at the Bitcoin Policy Summit in Washington, D.C. Innovations in mining could add weight to the pro-crypto argument, she added. The current political atmosphere is stifling for crypto. In this administration, there are a number of high-ranking policy positions that are held by people who are threatened by Bitcoin because they know they can't control it, Lummis said. Therefore, we're trying to view it as a negative and foresee how we should regulate the negative side of it despite its benefits. The Banking Committee is kind of the obstacle, Lummis said, and the Senate race in Ohio will be critical in determining the political landscape for crypto. You've got a sort of a blockchain entrepreneur running as a Republican against the sitting chairman of the Banking Committee, who seems to have Elizabeth Warren whispering in his ear about this topic, Lummis said. The current chairman of the Senate Banking Committee, Ohio Senator Sherrod Brown, is a vocal crypto skeptic. He is being challenged by Bernie Moreno. In addition, Montana Senator and Banking Committee member, Democrat John Tester, also holds a key position, and we're trying to educate his opponent on my side of the aisle about Bitcoin and blockchain technology. Lummis did not name the opponent. There are 3 Republican candidates who will face off in the Montana primaries in the run-up to the national election. We have better advocacy on the House Financial Committee and the House Agriculture Committee, Lummis continued. Lummis went on to talk about mining, saying Bitcoin miners are starting to get innovative with energy generation. She said, essentially we look at Bitcoin mining in 2 ways. There's grid stabilization, utility scale, and then there's energy harvesting. Innovations such as energy harvesting via methane gas, for instance, can get capital excited about the energy use of Bitcoin and how it can be positive versus viewed as parasitic, Lummis said. Our next top headline, Ether ETFs will probably be rejected in May, says VanEck CEO. Pins are dropping. Jan VanEck told CNBC that the lack of comment from the SEC regarding the roster of pending Ether ETFs was far from a good sign for approval by May. The chief executive of investment firm VanEck says it's unlikely the United States Securities and Exchange Commission will approve spot Ether exchange-traded funds in May. In an April 9th interview with CNBC, Jan VanEck said his firm's spot Ethereum ETF application will probably be rejected. He noted that VanEck was the first to file for a spot Ether ETF in the United States, alongside Cathie Wood's ARK Invest, both of which are awaiting a final decision on May 23rd and May 24th, respectively. The way the legal process goes is that regulators will give you comments on your application, and that happened for weeks and weeks before the Bitcoin ETFs, but now pins are dropping as far as Ethereum is concerned. CoinShares CEO Jean-Marie Mognetti was equally pessimistic, telling CNBC, "I don't see anything being approved this side of the year." VanEck's comments come following prolonged inaction from the U.S. SEC regarding a roster of 7 pending applications for spot Ether ETFs. Several commentators, including senior Bloomberg ETF analyst Eric Balchunas, have also looked to the ongoing radio silence between the regulator and prospective fund issuers as a key reason why a May ETF approval seems increasingly unlikely. VanEck's Ether ETF application is due for a final decision on May 23rd, the first of 7 fund issuers, including Grayscale, BlackRock, and Fidelity, awaiting approval. Balchunas lowered his formal odds for an Ether ETF approval by May from 70% to 35%. The analyst reiterated his stance on the pending approvals and echoed VanEck's sentiments in an X post on April 9th. The analyst reduced his approval odds to 35% in March. As we've said, need SEC to give comments on the filing documents, the critical feedback he mentions, and that still ain't happening. Even in person, they offering nothing. Silence is violence. Fellow ETF analyst James Seifert offered a similar take, saying that 0 comments/interactions is a bad sign. There's no reason for the SEC to have done absolutely nothing for months. When we knew this was coming, he added. VanEck's spot Bitcoin ETF, which trades under the ticker HODL, is the 5th largest of the newly launched 10 funds, excluding Grayscale. It witnessed an inflow of $461.7 million since it launched in mid-January, according to data from Farside Investors Data. Commenting on the success of Bitcoin ETFs, VanEck described Bitcoin as a maturing asset, adding there are still many investors yet to gain exposure to the asset. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.